I thought the only real place to start is to start again. It just was one of those kind of serendipitous moments that kind of get your cogs working a little bit. Vets commit suicide 4 times UK general population. That wasn't at the top of the list of priorities for them. So we decided to do it by ourselves.
If you're looking to be inspired, motivated and educated by the business journeys and lessons learnt of Leeds business owners, then this is the podcast for you. And I'm your host, Phil Fraser. Before we start, I have one simple request. Please hit the follow or subscribe button on the app that you're listening on. An argument in the vets was the spark for today's guest. Listen as Paul Hallett of Vet AI discusses what's important when raising funds, the supportive business ecosystem in and around Leeds, the extra benefits that strategic investors bring, and bank accounts for pets. Here we go. Today on the Leeds Business Podcast, we have with us Paul Hallett, founder and executive chairman of Vet AI. Good afternoon, Paul.
Good afternoon, Phil.
Okay, so let's start. Vet AI, what is it?
It's a healthcare business. It's operating in the animal health industry, and it's been brought to fruition because there's big issues in the animal health industry that we're trying to resolve.
Okay. And your client base is vets, is that right?
We've got employees who are vets, but we actually target pet owners directly through insurance companies.
All right. Okay. Well, we'll get onto the nuts and bolts of it in a minute. So let's take us back to where Vet AI came from and how you got to being there. I know you had a marketing business called Perfect Marketing, and that ended up in liquidation. So let's start there. I know it's not the best, the happiest place to start, but let's start with that.
I think it's an important point though, because I think that was where, a lot of the failures inevitably open the doors for the successes, which is the way I look at it. So I think with Perfect Marketing, this was an agency that grew quite fast, and me and a business colleague started that business called Jamie. He's a friend of mine, a really close friend of mine. And we built it fast, and we were doing like record revenues. And then we hit 2008 and soon had to mobilize to make the business continue. It's a very tough sort of time. But anyway, we did liquidate that company, and we had to get back up and move forward again with new ideas and new thinking, having learned from the failures of Perfect Marketing.
Okay. What do you think the learnings were from that liquidation, or why you went into liquidation?
There were probably a few things, but I think we were really good at acquiring customers, but not as good as looking after them. So we were a very big, was very focused on sales, get the sales in, and we got a lot of sales with massive accounts. But then we didn't spend as much time as we should have, making sure those accounts became, more than a transaction, a relationship, and built relationships with them. I think that was, for me, the biggest learning. It was far too new business hungry rather than relationship focused.
So you came out of that. Obviously, I assume a little bit battered and bruised. What did you do next?
Yeah, I remember it wasn't particularly nice in that phase. You're right, because it's getting rid of people that you like for a start. It's changing their careers as well as yours. So it was all that, which I think is a big challenge. But then it's also a positive step because you're trying new things and learning new things and trying to carve out a future that you want to play in. And for me, it was that moment of reflection, and ultimately, I didn't want to go back into marketing. And that was the first decision of not necessarily what I wanted to do, but what I didn't want to do, that helped clear the pathways for the next bit. So I thought the only real place to start is to start again and learn the ropes, maybe at different levels of organizations and different viewpoints. So I guess my key experience there was going in at board level with Rich Mills at Sleep Cogni, which is kind of a health tech business. and learning really how to bring healthcare technology to the market. Again, a company with investment, and Rich was fortunate at that point. I think it was Mercia that invested, but the person who represented Mercia was Ash Patel, ex Babylon Health. So he was an incredible person as well as Rich. So I learned huge amounts from good people in a short period of time, and then it naturally elevated me into a position of regaining confidence, I think, in doing something significant again.
What would you say were your key learnings at that point?
As I think I was learning about things like fundraising. I was learning about, the Rich was a guy who was very focused on the details. I also think I learned about focus conceptually as well. Like, it's very easy to be distracted in business, especially as a younger business. And the businesses that are here are very, very focused. They stay focused on one or two things rather than try and boil the ocean. So I learned about focus, and I guess I learned a lot of other things about the way that you deal with investors, the way that you, create business cases for investment, also how you execute and the responsibilities and governance that comes with executing a business plan at a board level.
Okay. You mentioned fundraising there. So let's say one of our listeners is about to go into a fundraise. What are the key things they need to bear in mind when they're going out, sort of holding their hand out and saying, please give me some money and invest in my brilliant idea?
I guess it's the stage, isn't it, that would matter, because I would always recommend targeting the right type of investor for your type of business at the right stage. But generally, I think it goes a long way to formulate a kind of business plan with, a clear market defined, how you play in that market again, and the appetite that people have in that market to buy from you. I think the people are critical. So, who have you got in and around you that are going to support you throughout this? What type of experience have they got? I think that's important. And an early traction, I always think, ultimately people are investing to get return. So, what does the business case look like? How much does the opportunity look like? And when will it start to pay back?
Yeah. I think that's one of the things I think a lot of people sometimes lose focus on is if you can go in front of an angel investor, and I'm not a very good angel investor, but I've done some angel investing. If you've got somebody in front of you who says, yeah, this many people have bought and this is how much they paid for and this is retention, they keep coming back. That's a massive, massive sales point, isn't it?
Yeah, I think it is the thing that people, I'd say it's one of the founder mistakes, I'd say, is they go in with an idea that they're so passionate about, but they can't crystallize it into cash, into real return. And so I think that's something that I'd always say focus on, is that early signs of cash coming in and that appetite to buy.
Yeah.
And then, like any business, I think as you evolve through that, stay relentlessly focused on, revenue, margin, especially those two things. I know it seems very obvious, but that is kind of the way to run a business.
Yeah. Good old fashioned stuff like getting money in and making a profit.
Yeah. Having, it's very difficult, I guess, when you bring in something brand new out, which we continue to do, to try and forecast short-term profit. It's almost a very difficult thing to balance when you're building something that costs money and takes time. So certainly with VetAI, we had to balance, revenue to short term, with good margin, with obviously a strategy to execute, groundbreaking innovation on a market globally, and tell both those stories in parallel. Because I think you tell one and the other one sits, you can't really tell both at the same time. So I think they're both critical stories for us.
Yeah. Okay. So you're working with Rich, you're working with Ash Patel. Where did the it's hard to say, the vet AI idea and thing, where did that come from?
I think it came from observing an industry, well, I've got a pet. I had Ruby at the time, Springer Spaniel. And I think it was a waiting room of a clinic where I saw a kind of confrontation between a pet owner and a vet around cost. And it just was one of those kind of serendipitous moments that kind of get your cogs working a little bit. And then obviously having been in health tech and having experienced that, and obviously having spoken to Ash a lot about Babylon, you start thinking, I wonder if there's a way that we could bring the cost of care down and enable access for more pet owners. And then that moment came where I guess in my mind, when I started seeing some of the data that sits under the fluffy industry, it was quite dark. I found it quite a dark industry. When you look at the stats, vets commit suicide 4 times the UK general population.
Wow.
Veterinary inflation rises year on year, around about 15%. Less people now go to the vet. I mean, they report over 50% non-medicalized pet owners in the US. I think they report 20% BVA'd within the UK. These are people that have a pet and aren't having that pet treated when they need to. So it's a big problem, and I just think that rather than technology being a disruptor, I think it's an enabler for giving those people access to care. And I genuinely think that the industry as a whole would be better off for that access. I don't think it trips up the revenues of the corporates or the independents. I think it enables the market to grow further.
Okay. So you're in the vets. You've had this light bulb moment. How do we get from that light bulb moment to actually starting the business?
I think it was from there. It was deep thinking. And it is deep. I remember going into so many different thinking processes to try and work it through. But it's ultimately research supported by thinking for a good period of time. And then when you get to something that you think, this is something we can deliver, it's about execution, and isn't it? It's moving from that idea, that inspiration to perspiration, as they call it. So I guess once it was crystallized, the next step was I'm not going to be able to do this by myself, and that recognition that although I've got strengths, I've got weaknesses, and I needed to fill those gaps in order to manage to grow the business the way that we wanted to. So the first gap was that we didn't have, I wasn't a vet, and it's a pretty critical gap. And so, in search of a partner that could be a vet, I came across my co-founder, Robert, and his wife, Sarah.
Okay. How'd you go about doing that? Would you just go through the vet directory, or?
Again, when I look back at this, it feels very lucky. But then I think also the other way, and I think there's opportunities we made. So I reached out to a big vet corporate at the time and said, look, I've got an idea about bringing artificial intelligence into the industry to improve access. And that chimed with an idea of Robert Dawson, who had within that corporation around how to bring telemedicine into the industry. And we both got connected in a pub, obviously. And we connected instantly on how we felt about the role technology would play in this industry. And we spent a lot of time between, I guess, then and setting up the company of real thinking and sharing ideas and trying to build a end-to-end flow digitally that enabled what we wanted to do in the future. But there was a lot of thinking, there was a lot of to and fro, and it kind of got to a point where we couldn't deliver the piece of work we wanted to within the corporate because it was too slow, more priorities. It was kind of game changing, and I guess that wasn't at the top of the list of priorities for them. So we decided to do it by ourselves, and that's when Robert put the first lump of money into the business and said, I'm joining you. He resigned from the corporation the day before, and we were on the road.
Right. Okay. Before we get to the next stage, I want to talk to our viewers and listeners about Leeds Business Podcast Fair Deal. The Leeds Business Podcast Fair Deal has two sides to it. My side of it, every week, I bring you free of charge lots of inspirational, motivational, and fascinating guests like Paul. You, viewer and listener, have one thing to do, and that is to recommend this podcast to 2 other people that you feel will get a benefit from it. That's it. That's the Leeds Business Podcast Fair Deal. Sound like a fair deal, Paul?
Brilliant deal.
Brilliant deal. Okay, so you and Robert have been throwing this idea around. You've basically made Robert chuck in his corporate job and spend money on this launch. What happened next?
We were. I guess I was then. Imagine it really from my perspective. So there's a new lease of life, really, and to put it straight, Robert enabled that. And so I'd spent a lot of time in the coffee shops of universities and in the university environment just because I felt that it fostered creativity and innovation. I think it's got an energy about a university campus, and the University of Leeds has that exact energy. So I spent a lot of time in the university, and that enabled me to plan, I guess, the connections that, again, we'd need to make in order to bring this business to fruition and make it happen. So again, I made a very strong connection with the university itself, Martin Stowe and Nexus, where we, built some of this groundbreaking innovation, with some of the world leading academics in the space. Our first employee was a kind of, a quantum physicist, very, very smart, but ultimately helped us formulate plans around data and how we'd collect data to bring the innovation. So, we were building the team. We were building the foundations of growth. And then on the payday, when Robert put the money in, it was execution mode. So it was like, okay, how do we get from here, literally zero, minus zero, to 0.0001 as quickly as you can, and we leveraged a lot, So that's a bit of advice for your listeners. As it's not always about cash at that point. There's lots of people, especially in Leeds. Yorkshire's a fantastic region for collaboration. People want to help, genuinely want to help, and we had everyone from lawyers, agencies, individuals, council members, trying to help get us started. I even talk about the press themselves, the local press, in putting us in the pages of the press, exposing us. I felt like it was a massive team effort, even though the team wasn't internal, to get us to market.
Right. Okay. So just give us a timeline. What sort of dates are we talking about now?
I reckon it was a year, maybe a little bit longer, to get from ideation to delivery of our first customer. And then it wasn't long after that COVID struck, and also that we struck a very significant deal with the biggest pet insurer in the country at the same time. It's a massive inflection point where all of a sudden you're having a handful of consults per day to huge volume, access to over 1 million policies, who could access vets online anytime, anywhere. And at the core of our service is to enable veterinary care digitally. So we wanted to prove that veterinary care could be delivered online, and we have proved that. A lot of the standard stuff that you go to the vet for, you can actually deliver online. Skin, vomiting issues, diarrhea cases. These are your everyday situations that a vet can quite clearly see online.
Okay, so in it's an idiot's guide to this. It's like, my dog's got a sore foot. Sort of hold him up to the camera, and there's a vet on the other end who goes, "Yeah, it's this, that, and the other. You need this cream or whatever." It's as simple as that. I mean, that's a very, very simplistic way of explaining it, but
I like simple though, because it often is. But the a lot around that simplicity as well, Phil. So if you imagine symptoms, the pet breed, and and all the profile information is very important to a vet. Then the consultation itself, then it's the treatment plan and recovery on the treatment plan. So there's a number of different steps there, but ultimately all the interaction is face to face with an animal. But often the vet's seen videos or images of the pet's issue as well in advance of that consult to save time.
From a business structure, just get this right. So you've got obviously the pet owner, you've got the vet, and it goes through the insurance company. So who's your client, and where do you make the money?
Well, our customer is the insurance business, and the way that we make money is we serve their customers with veterinary care digitally and get paid by the insurance customer. Okay. That's the majority of our business. However, there's still a chunk of our business which is organic, so it's pet owners coming directly to us and looking for healthcare.
Right.
But 25% of the UK pet insurance market now promote us as a service to their customers. So we're dominant and we're market leading in the UK. I'm looking to extend that over the coming years.
Okay. We've explained it the simple way. Here's a picture of Fluffy the cat. He's got a sore paw. Where does the AI and the data sit in what you offer?
I think there's I feel like at the moment, obviously we're at a very interesting point in time with AI, but if you boil it down, the AI is already commoditized, Phil. It's really the data that holds all the power. Collected the right way and used in the right way gives you clinical accuracy without necessarily having a vet to do it. Although what we do as a business, we ensure a vet's always in the loop. But, we're using tools that are driving hyper efficiency now into the industry. So moving consultation time from, say, 4 consults an hour to maybe 10, maybe 20, maybe 30, maybe 40, maybe 50. And that obviously gives you then control over price. So, when we think about AI and data, we think about time. When we think about cost. So, also what is we're going to reduce consultation time.
Right. Okay. And obviously that's beneficial to the vet, it's beneficial to the insurance company, it's beneficial to the customer. Everybody wins.
I think it's beneficial to everyone, And I know maybe some of the corporates will be thinking it's taking our customers, it's taking our revenue. But we don't see it like that. We see it as granting access to people who aren't even at the vets. So it's growing the market. It's enabling them to access care from their homes. It's making things convenient. And we hope that the whole industry win from this. It's not just and we think that will be the case. I think the bank tenors of the 1970s were worried that cash machines were going to take their jobs, but it quadrupled volumes into the banks. And I think the same sort of thing happens when digital enablement happens.
Okay. So, it's easy to tell us all about the growth of the business and all that sort of thing. Tell us about some of the bumps on the road and the learnings from them.
I think there's a couple of themes here. So I think the first one is obviously raising money is maybe a constant bump in the road that you've got to be very alive to. I think one of the lessons for any listeners here that it's relevant to is the concept of wishful thinking. I think as a founder, it's really easy to think that things will happen and turn out okay until they don't. So my advice is to de-risk that thinking at all costs. And I think that plays into investment well is, you can't wait till tomorrow. Sometimes you've got to get off your bum today. And it's that principle, I think, that drove us through some quite significant investment rounds. I remember not having long left with the most significant round, 2 months, and then we were out. And I hadn't even met the party that eventually invested at that point. And there was a conversation between me and my corporate finance advisor who was like, well, what are you going to do about it? And I said, I'm going to go to London and start pitching now. It wasn't on Friday, and it wasn't. So there was a pursuit there. There was a very aggressive pursuit to resolve it. And when I think about when we closed that deal, every second did actually count because we ran out of money, I think, on the Monday, and we signed on the Friday. Now, you'll know more than anyone, Phil, that is when you've got all that paperwork trail coming your way and there's weeks there and lawyers are playing around with agreements and there's a negotiation even in the contracts that Friday to Monday is quite scary. So I think that was a bump. I think as of, physically I was dying once I did that deal. The adrenaline it was carrying me through. I was in burnout mode, if I'm honest, though, Phil, because it was so stressful to try and get it closed. But we did it.
And I know that was a strategic investment rather than a PE house or anything like that. Is there any difference between getting money from a private equity and getting money from a strategic partner?
I think for me, strategics think more long term. So I think if we I'd imagine a lot of the VCs will want 3 to 5 year returns, and I just didn't think that at that point we would have delivered upon that. Whereas, for instance, now I think we're in a far better position to do that because we've built a little bit of a strategic moat in the boardroom, so it kind of enables growth. It de-risks the idea that we won't grow. So, what strategic investors do, just to be clear, is they bring the cash, but they also bring the growth. So we became number one because of our strategic investment that we made. So where others were burning cash on Google, which works obviously for some, we decided to work with a partner and give them value in return for customers. And that's where we took the business from 0 to 1, which is where we are now.
Okay. And just to be clear in terms of strategic partners, they can bring obviously customers because they're selling your product to their customer base. I assume they can bring expertise, they can bring contacts. I suppose it just takes you to a hugely next level, which private equity maybe can't do.
I don't know. I mean, we were lucky. Let's be honest. I mean, our strategic partners were brilliant for us, in, like you said there, in lots of different ways. But in fundamentally good people. Good people, and I genuinely mean that. And a lot of people that will find it hard to believe, but it is an absolute fact. We landed very good partners in our boardroom, and then I think with PE, PE naturally don't take startups on board because they're looking for, that consistency in revenue and business profile, which we can't deliver at such an early stage. So I think it was the right thing for us.
Yeah. Okay. Now, every week on this series of the Leeds Business Podcast, we're asking our guests to give us their brilliant business idea. So, Paul, what's your brilliant business idea?
Oh, I thought about this quite a few times. I do get a few ideas quite often.
We all do.
This one, I didn't have. It doesn't take me long to think about, but I love the idea of completely changing pet insurance or any insurance, to be honest. Re-engineering it so it's basically a bank account that you put your money in monthly, but you can control. But it comes with added benefits, so you pay for the added benefits instead. So it's kind of reverse engineering insurance into what. And if you actually ask most people why they don't take out insurance, their answer is, I can put it in a bank account. So I'd love to bring that concept to life. I think it's fascinating, the idea that you could bring a bank account to the fingertips of a pet bank account.
There you go. And I suppose you could put it in the dog's name as well, couldn't you? Even better.
You could, and you could have a card with the dog's head on it, and let them buy what they want with it, if you know what I mean. So they get some credit, let's say in pet shops and things like this. But yeah, I quite like the idea of reverse engineering the thinking there.
Fantastic, that's great. So if anybody has got any banking contacts and has a pet, maybe talk to Paul, and we can maybe make this happen.
Or our customers.
Or customers. Absolutely. Absolutely. Right, before we finish, every guest gives us a shout out from the Leeds business. So Paul, who's your shout out for?
There's lots of people in Leeds I'm connected with, so it's very difficult to pick one, but I will. It's a girl called Mel. She started a business called Live, Livve, and she's focused on the female health segment. And so she's trying to enable women with the menopause and going through those struggles to seek sort of clinical advice and get resolutions to make those years that are often very stressful and hard a little bit easier.
Fantastic. There'll be a link to Mel and Liv in the show notes below. She's actually had a shout out before on the show, so she's obviously getting lots of
Doesn't surprise me.
Lots of love and support across Leeds.
She's brilliant.
Okay, Paul, it's been absolutely fantastic having you on. Thank you very much indeed.
Cheers. Thanks, Phil. See you later.
So that's it. I hope that you enjoyed this episode. Make sure you hit the follow button so every new episode gets sent straight to your phone. See you next week.